So what is buy and hold? And what if I told you that buy and hold is dead? Find out more in this episode. Have you ever heard of the term buy and hold? What does it mean? In this episode, we're going to take you through what buy and hold is and how it can affect your retirement plan. So what is buy and hold? Buy and hold is a concept where you're going to invest in the stock market and you're kind of going to stay that path the entire time. The path is based on your risk tolerance. So your risk tolerance may be putting a certain portion into large cap type stocks, mid cap, which is middle-sized companies, and then smaller companies, as well as international and emerging market type investments. What this does is it builds you an asset allocation, and basically what you're going to do is rebalance that maybe every quarter or every year. Now there's a problem with that, and Radon's going to explain what that problem is.
So Merce just explained what buy and hold is. Well, the question that I would pose is, what's the problem? See, buy and hold, when we have invested money and the market's going up, it's the perfect time to be in a buy and hold scenario because your money is just increasing as the stock market goes up. But what's the problem? Buy and hold's really bad if the market's going down. So the problem is, if you remember, we had 2001 and 2002, very big declines. 2008, another big decline. Over 50% of your money would have been gone had you been in a buy and hold scenario and you were just kind of tracking the market. So many of the people that we work with that are close to or already in retirement don't want to be exposed to those kind of realities. So they'll talk to their advisor and they'll say, well, is this common that we're going to have a bear market again? Maybe 2008 was a fluke. Well, what I want to do is take you through and let's look at what I call bear market reality. The fact is that they really do hurt. So now just look at the facts. If you look here, you'll see that bear markets are defined as a 20% decline or greater. That means a 20% loss or greater. Since 1929, we've had 16 of these bear markets, and they occur about every 4.8 years. So the question is not, are we going to have another bear market? It is, when are we going to have another bear market? So what we want to do is be able to plan so that we don't take those big step back, that big step back in our portfolio. Now, how bad could it hurt us? Well, I want to walk you through an example of some ups and downs in the market, and I'm going to make it drastic, but I want to really help illustrate here that going backwards really does hurt us. So imagine that you're in a portfolio that over 4 years goes up 50%, down 50%, up 50%, and down 50%. Well, you might think, well, if I'm going down 50% and up 50%, I broke even. Well, that's not the facts. Let's walk through this example. You put $100,000 in an investment. That investment grows by 50%. Well, now your $100,000's worth $150,000. The next year you lose 50%. It's now down to $75,000. The next year you make 50%. So now your $75,000's worth $112,500. And then the next year you lose 50%. You're now down to $56,250. You've lost 43% of your money. When you lose 50%, if you want to get it all back, you have to make 100% to get back to a break even. So what we want to do is make sure that we don't go backwards. So let's look at some real market data. Now, I don't want you to get all wrapped up in all of the data here. I just want to take you through these are real stock market returns. What I want to take you through is to show you this. From the peak of year 2000, when the market had hit its top, you would have gone 13 years if you were just tracking the market and would have not made a penny. So it poses the question, how is it that I can invest my money, not do buy and hold, not be exposed to those downsides, and yet still be able to manage my money and make a good, decent rate of return? So imagine that your portfolio is invested in the stock market, but you're not exposed to the major declines, and yet you can still make a good, decent rate of return. So if you could imagine that, wouldn't that give you a real peace of mind retirement plan? Thank you for watching the video. I hope you found it beneficial. But if you still have questions as you plan for and live through retirement, I have put together an extensive kit to answer some of the most pressing questions as you plan for retirement. Just click the link below or give the office a call and we'll send the kit out right away.